Today's going to be a little bit more advanced, but I want to go over SSR, or short sale restriction. Now let's talk about what this means. The short sale rule was a Securities and Exchange Commission trading regulation that restricted short sales of stocks from being placed on a downtick in the market price of the shares. Now, this rule was in effect actually in 1938 and was lifted by the SEC in 2007. After it was lifted and the 2008 collapse, they realized maybe that wasn't such a good idea. And so they came back with an alternative of it in 2010. This is known as the Alternative Uptick Rule, or SSR, short sale restriction. Now, it does not apply to all securities, and restrictions in trading on downticks are generally only restricted in narrowly defined circumstances, such as when the price of a security has dropped by 10% or more from the previous day's closing price. And we'll see that on sec.gov as well. In February 2010, the Commission adopted a new short sale price test restriction, which is commonly referred to as the Alternative Uptick Rule. Now, this rule is designed to restrict short selling from further driving down the price of a stock that had dropped more than 10% in one day compared to the closing price of the previous day. What this means is that shorts are unable to hit the bid on the level 2. They have to place a limit order on the ask price. The SEC initiated this so that shorts cannot just plummet a stock into oblivion. Now, many brokers will allow you to know if short sale restriction is active. For instance, on E-Trade there'll be an S next to a stock with SSR active, but on Thinkorswim, the platform I use to trade, we are unable to know if SSR is active, which is very unfortunate, because SSR in day trading is actually pretty important. Despite this, you can know if a stock has SSR active on it or not, because if it has dropped 10% or more in the day, then it will become active. Now let's talk about why it's important to know if SSR is active or not. It's important because short sellers now, rather than hitting the bid, shorts are now creating a wall of sellers at certain resistance areas. And you'll see a lot of fake out breakouts happen. With SSR active, a lot of patterns that we see work very well for us, like red to green moves or bull flags. They're not as effective because there's so many sell orders and selling pressures around these breakout areas. And I've seen it multiple times. If a stock sells off at the start of the day more than 10% and SSR is active, then the stock sometimes will U-shape rather quickly and then test this open of the day and even break it. But there's a lot of shorts that are sitting there at the resistance area. And one thing to note as well is shorts are able to place hidden orders at certain areas. With certain brokers, you can actually place hidden sell orders. And one way to see this is when you see a lot of buying pressure coming in and lots of orders going through on the times and sales hitting resistance areas. If there's only 5,000 or so shares walled off at a certain resistance area, and all 5,000 shares have gone through on the times and sales and it's not breaking, then you know, okay, there's hidden sellers here. Then you'll know, okay, there's hidden sellers here, and they have their sell on the ask because they cannot hit the bid. And so with hidden orders there, you're going to want to exit your position immediately because you don't know how many shares are being sold at that certain level. So with SSR active, you'll notice that a lot of stocks are unable to break certain patterns that they conventionally would be able to. These breakouts actually turn into fake out breakouts because all of these shorts are putting their sell orders on the ask. Because buyers have to buy shorts positions. See, shorts have to sell their shares and buyers have to pick them up. So you'll see green candlesticks, you'll see upticks, but there's going to be so many shorts that the buyers are unable to break these resistance areas. And what I want you to learn from this is that you need to watch the price action on your stocks very carefully. If it has decreased 10% intraday so far, then know that SSR is active and be paying attention to the candlesticks, understanding that there could be hidden sellers and shorts waiting at certain resistance areas. With enough buying volume, all these shorts can get squeezed out, but you just have to be carefully watching the times and sales to see how many orders are going through and if you're breaking certain resistance areas. Just know that buying on a breakout with SSR active is very risky, and you most likely would want to buy on a bounce. Pay very close attention to the price action of the stock you're trading.